Today we are going to talk about 12 industries that got richer during every single economic collapse in American history. Not survived, not held on, richer. And I know what you're thinking right now. That's impossible. When the economy crashes, everyone loses. That's what most people believe. And that belief is exactly why most people end up on the wrong side of a recession. Now, if you want to know which 12 industries these are, and if you want to see real examples of how much money they made, even when everything around them was falling apart, stay with us till the very end. Because at the end of this video, you will also find out which of these industries you can actually start in today, and which ones have the best profit potential in 2026. So don't go anywhere. Let's get into it. Number 1. Consumer staples. Toothpaste, soap, toilet paper, cleaning supplies, basic food. Now here is something that will shift the way you think about recessions forever. When the economy crashes, people don't stop buying these things. They actually buy more of them. Because when money gets tight, people stop going to restaurants and start cooking at home. They stop buying luxury brands and switch to everyday basics. The money doesn't disappear. It just moves. And it moves straight into consumer staples. During the 2008 crash, the S&P 500 dropped 38%. Procter & Gamble, the company behind Tide, Gillette, and Pampers, dropped only 12%. Coca-Cola outperformed the entire Dow Jones by 14% that same year. Walmart, their sales went up during the recession because millions of Americans stopped shopping at expensive stores and walked straight through Walmart's doors instead. One Walmart supercenter generates $100 million to $150 million in revenue per year. And that number did not go down in 2008. It went up. Number 2. Healthcare. Here is a number I want you to remember. 852,000. That is how many new healthcare jobs were created during the Great Recession of 2007 to 2009. While every other industry in America was cutting jobs and shutting down, healthcare added 852,000 positions, a 6.6% growth rate, during the worst recession in modern history. Why? Because people don't cancel being sick. They don't reschedule their heart attacks. They don't postpone their hospital visits because the stock market is down. And pharmaceuticals? During the Great Recession, the pharmaceutical industry was one of the only sectors that achieved positive sales growth the entire time. One independently owned urgent care clinic generates $1 million to $3 million per year. And during recessions, those clinics get busier, not quieter, because stress causes health problems. And recessions create a lot of stress. Number 3. Utilities. Electric companies, water suppliers, natural gas providers. Think about the last time you didn't pay your electricity bill. You can't, because without electricity, your lights go out, your heating stops, your refrigerator stops working. Utilities are not optional. They are not a luxury. They are the one bill that gets paid before everything else. During the 2008 crash, while the Dow Jones dropped 53%, utility companies dropped far less and recovered far faster. Pacific Gas and Electric outperformed the broader market by 11% during that entire crisis. And here is something most people don't know. Utility companies actually benefit from recessions in one specific way. When the economy slows, interest rates drop, and utility companies borrow enormous amounts of money to build infrastructure. Lower interest rates mean lower borrowing costs. So while everyone else is suffering from low rates, utilities are quietly saving millions. Number 4. Discount retail. This is where recessions become fascinating. When money gets tight, Americans don't stop spending. They just change where they spend. They walk out of Nordstrom and walk into Dollar Tree. They stop buying premium brands and start buying store brands. The spending is still happening. It just shifts down the price ladder. And the businesses sitting at the bottom of that ladder, they see a flood of new customers they never had before. Dollar General reported revenue growth every single year during the Great Recession. Dollar Tree's stock price actually increased in 2008, while nearly every other retailer was collapsing around it. One Dollar Tree store generates $1.5 million to $2 million per year. They have 16,000 locations across America, and every single recession in history has sent more customers through their doors. Number 5. Debt collection. Now this one is going to make you think differently about recessions. When the economy crashes, people lose jobs. They miss payments. They fall behind on credit cards, car loans, mortgages. All of that unpaid money has to go somewhere. It goes to debt collection agencies. And here is the reality. The worse the recession gets, the more money debt collection agencies make. Historical data shows a consistent increase in profitability of debt collection agencies during and after every single economic downturn in American history. The U.S. debt collection industry generates over $18 billion per year. And every time a recession hits, that number goes up. Because recessions don't make debt disappear. They create more of it. Number 6. Cleaning and sanitation. Hospitals have to be cleaned. Schools have to be cleaned. Office buildings, restaurants, government facilities, all legally required to maintain sanitation standards. That requirement does not pause during a recession. And during COVID, an event that completely destroyed industries like travel, hospitality, and entertainment, cleaning and sanitation businesses saw demand explode to levels they had never seen before. Because suddenly, everyone needed everything sanitized. Constantly. A solo cleaning business owner working 5 days a week generates $50,000 to $80,000 per year. A cleaning company with just 5 employees brings in $200,000 to $400,000 per year. One commercial cleaning contract with a single hospital can be worth $5,000 to $20,000 per month. Every month, without interruption, regardless of what the economy is doing. Number 7. Alcohol and tobacco. Now, research shows people spend slightly less on alcohol and tobacco during recessions. But here is what that data misses. They don't stop buying. They just trade down. They switch from expensive wine to cheap beer, from premium cigars to discount cigarettes. The volume stays almost exactly the same. Only the brand changes. And tobacco stocks historically grow around 4% per year, recession or no recession. Every single year. That kind of consistent, predictable growth is why investors have called tobacco one of the most reliable recession-proof investments for over a century. It is not exciting. It is not flashy, but it never stops performing. Number 8. Freight and logistics. As long as people are buying anything, someone has to move it. Grocery stores need to be stocked. Online orders need to be delivered. Hospitals need medical supplies. Gas stations need fuel. None of that stops during a recession. In 2008, C.H. Robinson Worldwide, one of America's largest freight companies, remained profitable through the entire crisis. While banks were collapsing and car companies were begging for bailouts, freight trucks kept rolling. The U.S. logistics industry generates over $1.6 trillion per year in revenue. And that number has grown every single year for 3 decades straight, through recessions, pandemics, and every economic storm in between. Because movement of goods is not optional. It is the backbone of the entire American economy. Number 9. And this one, nobody sees coming. Tattoo parlors. In 2019, 30% of Americans had at least one tattoo, up from 21% in 2012. That growth happened straight through the Great Recession and every economic challenge in between. Tattoo parlors boom through recessions and recoveries, consistently. Why? Because getting a tattoo is an emotional decision, not a financial one. People don't look at their bank account before deciding to get a tattoo. They look at how they feel. And during hard economic times, people feel a lot. A busy tattoo artist does 4 to 6 clients per day at $150 to $500 each. At $300 average, that is $1,200 to $1,800 per day, through every recession, without slowing down. Number 10. Government and public sector. During the Great Recession, the unemployment rate across America peaked at 10%. The unemployment rate in the government sector? 5.1%, half the national average. Government jobs are funded by tax revenue, which comes from the entire economy, not one company, not one industry. And during recessions, governments don't cut. They expand. They hire more people. They launch stimulus programs. They pour money into infrastructure, healthcare, and social services. The U.S. federal government employs 2.9 million civilian workers. State and local governments employ another 19.5 million. 22 million Americans, largely insulated from economic downturns. And government contracts in construction, technology, healthcare, and defense keep flowing, regardless of what Wall Street is doing. Number 11. Mental health services. Recessions are terrifying. People lose jobs, lose savings, lose homes. Marriages fall apart under financial pressure. Anxiety explodes. Depression surges. And all of that creates an enormous wave of people who need help. During the 2008 recession, demand for mental health services increased significantly nationwide. During COVID, therapy app downloads increased by 200% in a single year. A licensed therapist in private practice charges $150 to $250 per session. 6 clients per day at $150 each. That is $900 per day, $18,000 per month. And post-pandemic, mental health has permanently become a mainstream priority in America. This is not a trend. The demand is real. The need is growing, and it will not slow down. Number 12. Repair services. Auto repair, home repair, appliance repair, plumbing, electrical. The logic here is as simple as it gets. When the economy is good, people replace things when they break. New car, new refrigerator, new dishwasher. When the economy gets bad, people fix what they have. And suddenly, every repair shop, every plumber, every electrician gets more business than they can handle. During the 2008 recession, auto repair shops reported some of their busiest years ever on record, because 22 million Americans suddenly decided to keep their old cars running instead of buying new ones. Every single one of those cars needed maintenance, repairs, new tires, new brakes. One emergency plumbing call costs $300 to $1,500. A plumber doing 3 calls per day at $500 average earns $1,500 per day, $30,000 per month, from fixing things that break more during recessions, not less. Now, before we wrap up, 2 things that most people miss about recession-proof industries, and these are important. Trick number 1. The smartest move is not just to work in these industries. It is to invest in them. Consumer staples ETFs, healthcare ETFs, utility ETFs. These track the exact companies in these recession-proof industries, and they pay you dividends every single quarter. Meaning, even if you never start a business, you can still put $100 per month into these ETFs and build wealth that grows through every economic storm. Your money works in recession-proof industries, even while you sleep. Trick number 2. The easiest industries to enter on this list, with the lowest startup cost and fastest income, are cleaning services, repair services, and mental health services. Cleaning, you can start with $200 and be earning within your first week. Repair services, one skill, one set of tools, and recessions hand you more customers than you can handle. Mental health, one certification, one Zoom account, and you can see clients from anywhere in the world. Most people look at recession-proof industries and think, I can't compete with Walmart or Procter & Gamble. You don't have to. You just have to be in the right lane. If this video gave you value, go watch this one next. In that video, we broke down 10 products that sell themselves, even while you sleep, with real numbers, real platforms, and exactly how to get started from zero. The link is right up there. Go check it out now. See you in the next one.